Okay, I think we are there. Yes. Okay, so good afternoon, Nicole. It's so good to see you.
Likewise.
I have a fake background. You have a real one.
I do have a real one. We
Um,
tried the fake.
so on the topic of credit, so one of the things that I deal with when I reach out to you.
Sorry.
Hello. What was
I think
that?
I think something sounded on my end. I'm going to make sure that my programs are closed so that does not happen. Sorry about that.
That's all right.
That was my reminder letting me know that I had the live broadcast.
We're live. Yeah, that we're live today. So one of the things that I run into a lot, and then I send people your way, is because of their credit, they can't qualify for enough. And I'm doing this, right?
Mm-hmm.
Usually I want them to talk to you because you can help them, guide them on what they need to do as far as how to get enough. So I think the first question to that maybe a lot of people don't understand that. Let me try that again. I think the first question is, why is your credit important when it comes to buying a house? I know that's really basic, but I want to keep it nice and simple.
I mean, the basic that most people immediately go to is lower payment. Better credit score, better rate, lower monthly payment, lower interest over the course of 30 years. So
okay.
I know you're a huge Paul Ramsey fan, so
yeah.
pay less over your lifetime, and you're going to pay less in interest if your credit score is lower to getting that lower rate.
So the higher the number, if we're looking at, what did you say a few minutes ago off screen? You said somewhere between 300 and 850 is the range. So 300 is what you do not need to be buying a house. I love you, but no. 850, your interest rate and presumably the amount you can afford monthly is going to be significant, right?
Credit score impacts how much you can qualify for without a doubt, but the amount that you qualify for, it really is more income driven. The credit score is going to help you get that lower payment, open up the doors to your conventional financing, which can offer lower payments because your mortgage insurance is lower. Yes. But as far as will my 850 credit score qualify me for $1 million versus my 300 credit score only qualifying me for 400,000? It just doesn't. That's where the income ties in.
Right. And that's a very great analogy. Just because you have a 850 doesn't mean you go strolling into it. You got to be able to afford the 850. And yes, I do have a sensitivity toward the high credit score, meaning you've accumulated a lot of debt. You've paid it consistently and on time and that kind of thing. But I tend to advise people as gently as I can, because I have a lot of rules that I have to abide by, but I tend to recommend strongly that people stay within 25% of what they bring home. So if they're bringing home 10,000 on 2 incomes, then yeah, your mortgage payment should probably be right around 2,500. If you're bringing 10,000 home on 1 income, then I would probably even tweak that a little bit more. But I mean, that's generally my perspective, but yours is different, right?
Right. I mean, we have to follow guidelines. So there's published preferred front ends, which is a 28%.
What did you just say?
Sorry.
I've never heard you say those words before.
Back that up. So when we look at debt ratios, we call it a front end, which is just exactly what you're talking about, that house to income ratio.
Okay.
And they have a back end ratio where it's the house payment plus all the debt.
Okay.
So when we're talking front end, so the housing ratio, there's not, the guidelines love to see a 28% of the income on there.
Okay.
That doesn't mean that people can't go higher. I've seen up to 40% approve, which I know for you and your preferences, that becomes scary, but that's people's rights. They're allowed to qualify for what the guidelines allow them to do.
Well, and the conversation I have with them, to be honest, is I want you not pissed at me after we close this property and you're making a payment every month. I want to be your friend when we're done. And if you're making a payment every month that you're pissed about, I'm going to be the first person you're ticked at. And then Nicole, you'll be number 2. So I'm trying to have us have better friendships after we close the transaction, because I don't want anybody mad at me writing a check or sending money off that they're like, what the heck?
Yeah. So it's easy to want the candy. They can be a little different to pay for the candy.
Right. Exactly. And so does the credit score, when you are selling a house and buying another one, the credit score still makes a difference, even if you're going to use proceeds from house A to buy house B, your credit score still makes a difference, right? So even when you get in the house, you can't just go balls out and be like, yeah, I'm going to stop paying. Like, it still matters because you're not going to be in that house forever, right?
It does. Yeah. I mean, if you're going to turn around and pay cash for the next house, then nobody cares what your credit score is. No, the title companies do not run a credit check.
Right.
But I mean, if you plan on doing anything from buying a car to buying a house to anything, you need to continue to maintain those payments. We see a lot of people that will get into a house and fairly quickly open a lot of Ashley Furniture credit cards and Home Depots and Best Buys and all the things to furnish the house. And that can be a real challenge because they've just bought this beautiful house, but then that credit card debt goes up quite a bit pretty fast.
And we need to make sure they're not doing that while we're in escrow too. So
yes.
If their offer accepted, we don't need, I always say you can measure for the fridge and you can measure for the couch, but don't you go doing same as 90 days, same as cash, because that's going to jack us all up.
Exactly. Or the new cars. That's
the new car.
They buy a new car in the middle of the process. I've had realtors call me and say, hey, there's no plates on the car out front that they just met me in. What's going on? And that's been a saving grace. So yes, please don't open up new accounts in the middle of a loan process. That will cause some hurdles. And typically we may not know about that hurdle until the day of funding when we're checking the back end credit to make sure nothing's changed. That's when that surprise comes out. And let me tell you, when you're trying to fund a loan and get your keys that day, nobody wants to be jumping those hurdles. So no, please do not open credit cards or any other accounts during the loan buying process.
Does a vacation count? Like if I am in escrow or whatever, and I want to just suddenly get away for the weekend and I can like go to Hawaii or something. Ooh, I'm getting feedback. Are you getting that?
I heard a little like bubble, but I don't think
if I want to go to Hawaii while we're in escrow and I didn't have it prepaid, is that the same thing as running credit, like a big purchase like that?
It all depends. So what might be yes for one person is no for the next. So if you have somebody who's very tapped out, their debt ratio is pushing the limitation to where, hey, you're not going to qualify for this house if you have anything else. And then they go charge $7,000 and have a $200 credit card payment that shows up again on that 9th hour credit review at closing. It could cause a stop at the door because we can't add it into their debt ratio. We'll typically see everyday purchases and those are fine. We just check them, make sure that the payments are still in line, plus or minus reasonably. We just continue on. But if there's something that's dramatically different, we have to make sure they can qualify for it.
I had one client one time, he was like, I went to Home Depot and I was like, it's okay. You can go to Home Depot. Are you sure they're going to see it on my card? I was like, do you go to Home Depot regularly? Yeah. Okay. Then that's okay. If you buy a Home Depot, Mayday. But if you go to Home Depot, we're okay.
Exactly. I mean, the other caveat as well too is they could have went to Home Depot, but what'd they buy? If they bought the fridge, the oven, the new carpet, new tile. So yes, Home Depot could technically be a bad idea.
Yeah. No, I think it was just a regular old trip, but it was giving him fits. And I was like, Jordan, slow your roll.
I always appreciate my clients that are more, can I do this? Can I do that?
Yes.
I'm going to go to the store this weekend. Am I okay to do that? Yes, absolutely. But I appreciate you checking.
Yes. I always try and tell them it's like the bubble from the girl in the movie Incredibles, the Incredibles, the superheroes, right?
I haven't seen it, but I know which one it is.
You say what? You haven't seen it?
I haven't seen it, but I know which one you're talking about.
Okay. Violet. She's the one, she has a bubble.
Okay.
And I always say like escrow is that bubble. So we don't want to mess. That's our security. We don't want to mess with that. And then the minute escrow closes, that bubble pops. Trick or treat. Go get your fridge and your couch and whatever. But then listening to you, like that could even be a problem. I mean, I'm giving bad advice, Nicole. Good Lord.
Once they have keys, I don't care what they do. You are exactly right. The bubble is popped, but they got to be a little careful that they don't pop it too big. Too much.
That's funny. Okay, let me look at my notes here. Okay. So the next question I have for you is there something you as a lender that does this all day, every day, wishes that you could put out into the nethers, into the world, something about credit that you wish we all would know?
There's a few things that came to mind. The first one is to watch the small payments. those little payments will get you. I just had a client who didn't realize their annual service fee hit, and they had a 30-day payment in January, and it tanked their credit score a lot.
Well, how big was this payment? Good Lord.
$20. It was like a $25 service fee, annual service fee. So
and it tanked their payment?
Well, it tanked their credit score because they had a very recent 30-day late payment. So it dropped them like 50 points.
Whoa.
Yeah, that initial reaction can be some. If you have great credit and that happens, you're probably not going to see as big of a change. If you maybe have a limited credit profile and something like that happens, it's going to be a huge thing. So when you have negative credit and you have positive credit, it's like a big game of tug of war. And if you have one additional negative, that tug of war, that rope starts to pull back over that negative side again.
Okay.
So it can be a big deal for some people.
Well, and they were, if that's making them drop 50 points, they were eking in there anyway, probably, right?
Not necessarily. I've seen some that, they went from here to here, just, and it could change the loan type. It can change the rate, the payment, everything. So what they were expecting over here is now a little bit different. So just kind of to watch for, watch your credit card balances. That's anytime you get over 30% of the allowed limit, you're going to start to see that score decrease. The credit report does not look at that the account, let's say, for example, the credit card is a $500 balance and you charge $350. Your credit is going to think you're almost maxed out. So it's going to start dropping your score. It doesn't take into account that account's only $350. It just sees that your available credit is now starting to lower, and it thinks you're in financial trouble, and it starts lowering that score as a result.
Aha.
You want to try to keep those balances under 30%, or, in many cases, people pay them off every month, and that's fantastic, but not everybody can do that. Try to keep those balances low. Some people will pay off a card and close it. Not the best idea, because it brings your available credit back down and can actually drop your score, because now your available credit's decreasing again.
Now, there are things that you will advise clients, and some that we've worked with, that they do need to go ahead and close XYZ, whether it's, I don't know if it's called closing a past medical situation, but like if they've got too many, you'll say, okay, because we don't want to poke too many of these bears and make them all start growling at us at the same time while we're trying to qualify to buy a house. But you do recommend that they go and say, okay, nudge that one and pay that one off, or close that one, right? You do have a select way to do that. Yeah.
So that's a different can of worms. This is just keeping credit active, but yes, those are good ones. In this scenario, we're just trying to keep that active credit positive, right?
Right.
In the situation that you're referring to, let's say I run a credit and that credit score is a 530, for example, but then I'm reviewing, why is it a 530? Well, I see multiple medical collections, things like that. I see AT&T collections. It just kind of depends on what they've got going on. Right. I'll give a recent scenario of someone that I just helped. They had I want to say about a 667, which is by no means bad. But the 4 negative accounts were all medical. 2 of them were $75 each. They are not typically, if you're going to fight with a collection over $75, it's not worth the damage in your life it's going to cause. Pay them off and get rid of them. Okay. And that goes for AT&T, Verizon. I mean, so many people are like, I refuse to pay them. I'm not paying that $100. I don't owe it to them. Okay, because you're going to pay $40,000 or $50,000 more in interest than this $100 principal. So look at the long game here.
Right.
But going back to answering your question on deleting them, this particular gentleman was able to pay off 3 very small medical collections. We got him deleted, and then he disputed another big one that wasn't supposed to be there. His credit shot up to a 767. From a 660. So this was within 2 weeks. So it's a big deal. Yeah. I mean, greatly changed the payment. I mean, dropped his payment almost $200 because
let's review. So that higher credit score made the interest rate not as didn't make the banks as nervous.
Correct.
Right? So then the interest rate goes down, then the payment amount goes down as well. Did I explain that?
In this case, and in this case, it's conventional. So the mortgage insurance factor also decreased. A conventional loan, the mortgage insurance is tiered based off credit score. So the better your score, the less risk that mortgage insurance company thinks they're taking by extending that coverage over, and the lower the factor is. I mean, the factor went from almost 1% of his loan amount down to 0.22% of his loan amount.
I have so many clients right now. I have 2 in particular that are engineers, and they like to talk just like that.
Mhm.
And my brain starts to get a little like after a while. But
get
you, I love the way you explain it, because I'm not humming in my brain right now. First of all, I'm following along, but this is how I know you're really good at what you do, and why I send so many people your way,
and
because
I'm thankful.
yeah, I mean, we've done how many transactions, but like, just that you have all of this knowledge, but you make it very, very easy to understand. Like, I don't need to know all that, I just need you to tell me how, like, if I'm a buyer, okay, what do I need to do, Nicole? Help me,
But
So
you're on
that's
the front lines. You talk to them all the time. I mean, sometimes you're able to guide in somebody who's nervous. Oh, I can't qualify. I'm never going to be able to make it happen. You having some of this knowledge helps you be able to guide them in to not be so scared, so that they do make that next step.
we had that transaction last year. She was a very nervous Nelly and thought she couldn't, and I'll never be able to. And I met her at an open house at a house I was selling. And lo and behold, I was like, you need to talk to Nicole. If you're able to be paying that for rent, you can be buying a house. Lo and behold, I gave her to you. And within a month, we were shopping for a new house.
We were able to fix all of the inconsistencies in her credit, and she was on it. It's a teamwork effort. I can't just poof. I can give you all the tools, but I'm not allowed to call on your credit. I can't call and fix these accounts for you. And I gave her the tools. She was on it.
Oh, there you are. Are you back?
Back?
I lost you.
All right.
I think whoever's on Wi-Fi, please get off. That would be my house.
Got it. I can't kick my team off Wi-Fi. I'm sorry. They got to keep working. Uh-oh. I think I lost you. Angel. I think we lost Angel. We might be waiting for her to get back. See if I can get her going. All right, so I think it's just me. I will wait for Angel to get back so we can keep doing the chatting. Let's see. All right, guys, I'm going to pause us and we will be right back. We're having some technical difficulties over at Angels. There you are.
Can you hear me? Can you see me?
I can. Hold on one second. As soon as I can figure out. Oh, there we are. Okay, I figured out how to do it.
We're back.
We're back.
I don't know what happened. I remember I was explaining again off camera that I'm in trouble with Facebook. So maybe they got mad at me again and booted me, because this is streaming to YouTube and to Facebook. So, we just restart, whatever. It'll be fine.
Yeah. I paused and loaded for you.
Yeah. Thank you for being patient while I got us back. So here, back to our person that we were talking about, how we thought, or I met her, she thought she couldn't do anything. And then as far as like buying, and she was getting ready to rent something ridiculously expensive. And I said to her, if you can afford that to rent, I'm pretty sure you can afford a house. And then within 30 days, she and I were actually actively shopping. And then I think in like 2.5, 3 months, she was a homeowner. So, and that is not always the case, as I know. Sometimes it's a longer window of repair, right? Where they have to, it's not always 30 days and we're shopping. Sometimes they got to have the long game in mind, like you were talking about. Yeah.
Yeah, there's sometimes where I'll be honest and say, you're probably looking at 6 months, especially if there's some very recent late payments. Those can be a little more challenging to overcome. You've got we can do a lot by telling you bring down the balances, let's get rid of these collections, but those late payments are still there. So to some degree, we have to age those out and start to recover by showing the credit that you can make those positive payments.
I love it. I love it. And I know we talked about, like what a good score, why a good score is important. And if there's something that you could share that you would want, everybody to know. But at the end of the day, and this will probably be my final question to you, because I don't want to take up too much of your time, but at the end of the day, what does a good credit score, or what does a credit score indicate to a bank?
If you're making your payments on time, so you have that, let's just be a top of the ratio, you have that 850. The bank sees that you can make all of your payments on time. They're going to realize that they're not taking as big of a risk on you. So the process can be a little smoother. Someone who might have a little bit lower because they've had recent late payments, collections, charge-offs, bankruptcies can show up in that history. All of those tell the bank that at some point you've had financial trouble. So they're going to use a little bit more scrutiny to review to make sure, are you financially okay to be making this additional payment? I mean, I'll have a lot of people that'll come to me with a lot of recent late payments. Let's go back to those $25 ones, really small, no big deal, right? It's $25. But the first thing the bank's going to ask is, you can't make the payments you have now. Why would we extend a bigger payment to you in this instance? I mean, that's what underwriters are looking for. They're looking to make sure that you can make this payment and that you have a history, and we're not at risk of default because we extended to somebody who maybe wasn't in a position to buy at that point. So the higher the credit score, it's going to indicate that you have a history of making those payments. You've never taken on more than you can chew, and you've been able to cover yourself. That lower score doesn't indicate the same thing.
Banks don't want to have a lot of risk. They like to
make their money back.
They want their money back, and that's why banks exist, to make money. I mean, that's adorable that we think we're all putting our money in there to keep it safe, but the bank is making money, and that is why they are a bank. So anyway, I am so thankful that you hung in here this afternoon for all of our, we're live, we're not live, we're on, we're not on. You can hear me, you can't hear me.
We made it.
We made it. Thank you so much, Nicole. I look forward to sending everybody to 661-332-4924. Or here, let me pop up your Facebook page so that if anybody is on Facebook right now and they want to pop over there and they can see all your activity, all the good stuff that you guys do here locally in Bakersfield. And you're a local girl. You've been here most of, if not all of your life, right?
Born and raised. Yeah. With my teammate is my mother. So we are a mother-daughter duo over here. We've been working together for almost 20 years now, which is crazy. I've double counted that number twice just to make sure I did it right. So between the two of us, she's got even more experience. We like to say between the two of us, we have over 50 years experience combined. So there's a lot of brains in this house that can typically look at many situations and come up with ideas or game plans if we need them, or any other situation we might encounter. So we have a really good team over here. And
I have to say, with as many transactions as we have done, it does, because we deal with people that come to us from all over, and I'm not able to always send them to you, Nicole, but sometimes when I'm dealing with other lenders and they get I don't want to say flustered, but they just kind of get antsy. Maybe that's the better word.
Yeah.
And maybe it's their disposition, but you are nonplussed. It does not, it takes a lot to get you I'm going to go lose my, after we're done here, you're very well, let me look, let me see, what can I maneuver? What can I tweak? So that's what I love about you is, especially if I have a nervous buyer, I definitely want them sent to you, because I know you're going to talk them off the ledge. Okay, here are the steps.
Exactly. Two antsies do not make it any better. So at least someone needs to be calm. I can't say I can always do it 100%, but I really try to, okay, let's look at the picture. What do we got going on?
Right.
Can we solve, like, the new car during the transaction? Can we solve it? What options do we have?
Right.
And then go from there.
Right. No, I'm so grateful. Thank you, Nicole. Thank you and I'm glad I got to introduce you to everybody on the channel and on Facebook, and I look forward to more transactions with you.
Thank you for letting me live stream for my first time ever.
Yes, you did it. You did it. Thank you so much for everybody, and I appreciate. No questions. Sorry, Nicole. Let me double check that. Nope. No questions, no comments. So, but next time they know you're coming. They're going to be like, oh, I'm going to ask Nicole.
Sounds great. All right.
Thanks, friend. Okay. Bye.